Welcome to the Deep Dive, where we take a mountain of information and distill it down to those surprising nuggets and key insights you need to be truly well-informed. Today, we're doing a deep dive into a fascinating company right at the heart of the enterprise data storage world, Pure Storage, Inc., ticker symbol PSTG.
Exactly. And our mission for you today is to unpack this comprehensive investment analysis report on Pure Storage. It's dated July 16th, 2025. Now, this report, it's built on publicly available info and analyst consensus, and it gives us a really detailed look at what makes this company tick. Financials, market perception.
Right. We'll be looking at their growth, their profitability, financial health, and what Wall Street thinks.
We'll zero in on their growth strategy, their path to profitability, their financial health, and what Wall Street is currently saying.
And you'll discover how a company focused on data storage is, well, strategically positioning itself right at the nexus of these huge tech trends like artificial intelligence and hybrid cloud, and how that's fundamentally transforming its entire business. So, okay, let's unpack this. One, the transformation of growth, a strategic pivot. Let's start with growth. What immediately stands out in this report isn't just the pace of Pure Storage's expansion, but the quality of it. The analysis highlights a pretty significant strategic shift towards a more predictable, high-margin, subscription-based model. Can you maybe elaborate on what that means for their growth story?
Absolutely. So historically, Pure Storage showed robust top-line revenue growth, averaged about 14.6% year over year from fiscal 2021 to 2025. Now, while forecasted total revenue growth moderates slightly, maybe to around 12.5% for fiscal 2026-2028, the really compelling story is sort of underneath that. Their subscription services revenue, this includes things like Evergreen One, that's their kind of unique storage as a service offering, and Portworx for container storage, that part grew much faster, like 22% in fiscal year 2025. It really shows a deliberate and frankly successful pivot.
Okay, yeah, that distinction between the overall revenue and the subscription revenue seems critical. The report also points to a turnaround in profitability metrics. What does that turnaround look like specifically, like in terms of the key financial indicators?
Oh, it's quite dramatic. We're talking about key profitability metrics like EBIT earnings before interest and taxes, and EBITDA, net income, EPS, earnings per share. Historically, EBIT growth averaged an astounding 215.3%. and net income averaged 140.2%. Now, this isn't just growth, right? It signifies a real move from negative figures into sustained positive territory. That's huge. And looking ahead, these metrics are still projected for very strong growth. EPS, for instance, is forecast to grow over 40% annually.
Wow. So this really powerful expansion in profitability, actually outpacing their overall revenue growth, sounds like a direct result of that strategic pivot to subscriptions, right?
Precisely. These services, they just inherently carry higher margins and create what we call operating leverage. Essentially, as their subscription base grows, a larger portion of each new dollar of revenue translates directly into profit because, the fixed cost gets spread out.
Makes sense. And what's really underpinning this growth and the strategic shift, the report mentions their alignment with two of the biggest trends in tech.
Yes, their strategic alignment with AI, artificial intelligence, and also hybrid cloud environments is a major catalyst here. The report points to a significant design win with a top-tier hyperscaler, the massive cloud providers. It's widely reported to be Meta, and also certifications for NVIDIA's AI platforms, specifically their DGX Super POD. These aren't just buzzwords. They actually demonstrate that Pure solutions are certified for the most demanding AI workloads. It opens up a truly vast addressable market.
Right, so the overall weighted growth rating for Pure Storage then stands at a strong 4 stars out of 5. That really seems to reflect the successful transition to sustainable, high quality, and increasingly profitable expansion. 2, profitability unleashed from losses to sustainable gains. Okay, moving from growth to profitability, the report highlights Pure Storage's impressive journey, from being this high-growth, loss-making entity to a sustainably profitable enterprise. What are the key indicators showing this shift?
Well, one of the most impressive aspects is their gross profit margin. It's been consistently excellent, really stable, hovering near 70%. Now, that's absolutely top tier for the industry and speaks volumes about the value of their proprietary software and their evergreen architecture. Even with some slight dips in fiscal year 25, apparently due to NAND pricing, that's the cost of flash memory chips, it remains incredibly strong.
70%. Wow. It sounds like they've hit a real inflection point then. The report details a clear swing in their operating profit margin and net profit margin. Can you break down that transformation?
Yeah, it's a dramatic turnaround, like we said. They've moved from significant losses, for example, like a negative 13.7% operating margin and negative 16.7% net margin back in fiscal 2021. Shared has sustained positive profitability, reaching 2.7% operating margin and 3.4% net margin in fiscal 2025. This trajectory, it's a major milestone. It demonstrates that their operational efficiencies and those higher margin services are really starting to pay off.
And how's this impacting shareholder value, particularly when we look at metrics like return on equity, assets, and invested capital?
Well, this improvement is a direct result, again, of that shift to high-margin subscription services. As that recurring revenue stream grows, it naturally drives further margin expansion. So return metrics like ROE, return on equity, ROA, return on assets, and especially ROIC, return on invested capital, they've also made a powerful swing from deeply negative levels to positive ones. This indicates they're using shareholder capital much more efficiently now. And the report underscores that the improvement in ROIC specifically shows the company is now generating returns above its cost of capital, which is a really critical threshold for creating long-term value.
Got it. So the overall weighted profitability rating comes in strong again, 4 stars. This really signals a clear and credible path toward achieving margins more in line with, say, established, best-in-class enterprise tech companies. 3, financial fortress, a rock-solid balance sheet. Okay, now let's turn to financial strength. The report paints a picture of an exceptionally strong balance sheet. I think it even calls it a fortress. What gives them this significant competitive advantage?
Yeah, Fortress sounds about right. Their liquidity is incredibly robust. Metrics like their current ratio, quick ratio, and cash ratio are all rated excellent and stable in the report. They comfortably exceed industry norms and even peers like Dell and NetApp. For example, their current ratio has been consistently well above 1.0, and their cash ratio being at or above 1.0 means they could actually cover all their short-term liabilities with just cash and cash equivalents alone. That's a very, very comfortable position to be in.
Extremely comfortable. And when it comes to solvency and leverage, Pure Storage seems to stand out even more.
Absolutely. They have a very low and, importantly, declining debt-to-equity ratio. It reached just 0.22 in fiscal year 2025. And the report specifically notes, quote, the company holds more cash than debt, end quote. They have a net cash position over $1.3 billion. This gives them immense financial flexibility. Their interest coverage ratio, which shows if they can cover interest payments with operating profit, has made an excellent turnaround too, from negative to a very healthy 12.6 times. Furthermore, their free cash flow, or FCF, generation is exceptional. Their FCF is nearly double their total debt. That indicates massive capacity for debt service or investment or shareholder returns.
Okay, so what does this all mean for their capital allocation strategy then? How are they actually using this strong financial position?
Well, as a growth company, they don't currently pay a dividend. That's pretty typical. Instead, they strategically retain cash to reinvest in those high-growth areas, like AI-focused R&D. But crucially, they also actively return capital to shareholders through a pretty aggressive share repurchase program, like the $374 million they returned in fiscal year 2025. So this robust financial foundation, it gives them the stability and the resources needed not just to execute their long-term strategy, but also to innovate aggressively. This pillar of their business, financial health, earns the highest possible overall rating in the report, a full 5 stars. 104. Wall Street's verdict, analyst, and broader market sentiment.
All right, so beyond the pure financials, what's the buzz on Wall Street? And, in the broader market about Pure Storage, what's the general sentiment like?
Analyst sentiment is overwhelmingly positive. The consensus recommendation is actually a strong buy based on 20 analysts covering the stock. The average brokerage recommendation, it's 1.80 on a 1 to 5 scale, where 1 is strong buy. This includes 12 specific strong buy ratings and 2 buy ratings. That indicates a really high level of conviction among the professionals tracking the company.
That's a pretty powerful endorsement. And it's not just historical looking, right? The report highlights positive estimate revisions for the next fiscal year, too.
Exactly. Over just the last 90 days, there's been a net upward revision of plus 4.5% for EPS and plus 3.2% for revenue forecasts. This reflects growing optimism, very likely driven by those AI and hyperscaler catalysts we discussed earlier. It suggests analysts see even more upside potential brewing.
Okay, and what about price targets? What are analysts projecting for the stock's future value?
The price target analysis is also very compelling. With the current price around $54.52 at the time of the report, the average analyst price target is hovering around $71. That implies a potential upside of over 30%. There's even a high target out there of $93, suggesting, even greater potential in some analysts' eyes. And it's worth noting, too, they have this consistent track record of positive earnings surprises. They've beaten the consensus EPS estimates in each of the last 4 reported quarters. That kind of beat and raise dynamic, it really reinforces the perception of effective management execution.
Right, that builds confidence. So beyond the sell-side analysts, how does the broader market sentiment align with this positive view?
Yeah, it definitely aligns. News flow around the company is rated very positive. It's dominated by announcements like a new CFO appointment, the launch of their enterprise data cloud platform, new high-performance products specifically designed for AI, and also strategic collaborations with major players like NVIDIA, SK Hynix, and Rubrik. So lots of positive momentum there. General investor sentiment, looking at social media and similar sources, is also rated positive, with a score of 75 out of 100, reflecting clear excitement about their AI positioning.
And trader sentiment.
Trader sentiment is decidedly bullish. Short interest, that's the percentage of shares bet against the stock, is low at just 3.84% of the float. That's declining. That shows a lack of bearish conviction. And the options market shows a put-call ratio of 0.48. It's quite a bullish signal, as call options bets on the price going up significantly outweigh puts, which are bets on the price going down.
Okay, so both the overall analyst sentiment and the broader market sentiment receive strong 4-star ratings again. It really creates this powerful, unified, bullish narrative around Pure Storage conclusion synthesis. So, when we put this all together, what does it really mean? The final overall company fundamental rating for Pure Storage in this report is a strong 4 stars, all along, with a numerical score of 4.43. This deep dive has really unpacked the different layers of this company.
It really has. Pure Storage seems to stand at a pivotal point. They've successfully transitioned, it seems, from that phase of rapid cash-intensive growth to one of sustainable, high-quality, and increasingly profitable expansion. Their growth is clearly driven by that strategic shift to the high-margin, subscription-based model and, importantly, their deep alignment with these huge AI and hybrid cloud trends.
Yeah, the remarkable improvement in profitability moving to sustained GAAP net income, that's generally accepted accounting principles and those expanding margins, that's a key takeaway. And capping this whole strong operational profile is that fortress-like balance sheet we talked about, characterized by substantial net cash and minimal leverage.
Absolutely. This combination, a differentiated product platform, deep alignment with durable growth markets, a superior business model driving margin expansion, and truly strong financial fortitude. It positions Pure Storage as a potential best-in-class technology enterprise. It's a pretty compelling story of strategic execution and smart market alignment. Outro.
This deep dive into Pure Storage really illustrates how strategic business model shifts, coupled with alignment to megatrends like AI, can fundamentally alter a company's financial profile and its standing in the market.
It definitely does. And it raises an important question for you, our listener. How might the success of companies like Pure Storage in transitioning to these subscription-based models influence other hardware-centric industries? Industries facing similar pressures and opportunities in this age of AI. What other sectors could potentially follow this kind of blueprint?
Something to think about. We hope this deep dive has given you a shortcut to being well informed about Pure Storage and the broader trends shaping the tech industry today. Until next time, keep exploring and keep learning.